Good morning, and thank you for joining us today to discuss digital transformation in rural lending. Access to capital in the agricultural sector is more important than it's ever been before. If there's any sector that stands to benefit from the advances in digital engagement, it would be the farmers and getting the ease at which they can engage with their lenders. 2020 presented further challenges as they were forced to operate under COVID-19. And looking forward, there seems to be more change to come, whether it's change from risk and environmental compliance, changes in geopolitical pressures, or changes in land and commodity prices. There's a role for lenders to play in supporting the farmers in both New Zealand and Australia. Before we get into the conversation, though, I would like to just share our safe harbor statement. There will be some forward-looking statements in this presentation, and I would encourage you to read through this so that you can be fully informed around some of the risks and uncertainties that relate to some of these forward-looking statements. I'm pleased to welcome Robert Poole and Judy Slimm, who will be joining me in the conversation. Robert is a partner for the consumer and retail sector at KPMG, where he's been there since 2017. Robert comes from a farming family in country Victoria and has been extensively involved in agribusiness and food supply chain. He has used this experience to successfully build an incredible food and agribusiness practice at KPMG from scratch. To be now the KPMG is now the #1 professional services firm in the Australian food and agribusiness sector. I'm also joined by Judy Slimm, a colleague of mine from nCino in the Americas. Judy has over 25 years of experience in the financial services industry and has spent over the past decade working with US farm credit. So thank you for joining me, Robert and Judy, and looking forward to the conversation. So Robert, well, let's dive straight into it. I think before we kind of talk about technology and nCino, I'd love to welcome you to share some of the experiences and observations that you've made about the agri sector in Australia and New Zealand.
Hey, thanks, Mark, and good morning, everyone. Yeah, it's a really interesting time for agriculture, food and fibre production. We're looking at a period of growth. We're looking at a period of global population growth, middle class income growth, and I think from a farmer's point of view, it's been one of the best periods of being a farmer for many, many years. Yes, we have challenges, but just a general sense of excitement around farming and agriculture, I think, is as strong as it's been for some time. So, however, on the flip side, that comes, as I say, with challenges that we've got to overcome. And we've seen geopolitical trade challenges emerge in the last 12 to 24 months. There's pressure on us to farm more sustainably than we ever have before, and that's true in both Australia and New Zealand, where there's pressure on us to use natural resources and protect the environment in more ways than ever before. Access to labour, Mark, is a significant issue. COVID has really heightened that, particularly in industries like horticulture, where even getting the crop off has been a challenge. So we'll need to continue to look at not only the physical number of people that we have access to, but also the skills they have. And the one that we could perhaps talk about the most today is access to capital, because our growth aspirations as sectors in the two countries is got to be reliant on capital flows into the sector. I think the New Zealand industry has probably done that better than the Australian sector to some extent, but we've got to have ways where both the banking sector and the capital markets are attracted to agriculture. They're servicing it in a new way as agriculture changes, to some extent from the traditional family farm into corporate families and corporate agriculture, but also keeping an eye on the fact that the traditional family farm will still underpin a lot of production out of the sector. So we wrote this report, Mark, Talking 2030 for the Australian industry. It's something we're very proud of, because I think what it did was change the narrative in Australian agriculture from a sector that was maybe not seen to be a modern sector and seen to be a sector under pressure, turned it into a sector that had a true growth ambition. And I know, working with my colleague Ian Proudfoot in KPMG in New Zealand, he does a very similar thing. In fact, he does a better job of it than me, probably, in terms of setting the vision for agriculture in New Zealand and setting the challenges and issues that we have to address to be part of that. So if you just flick to the next one, Mark, I think credit to the ANZ, they did a piece of work called Greener Pastures back in 2012. And this figure of $600 billion of capital required to not only transition from the baby boomers into the next generation of agriculture, but also to grow it to this 100 billion. It just shows that, you know, there's huge amounts of capital required, either through the traditional lending system or through the through the new flows of capital through the wealth sector and the pension fund superannuation sector. But, you know, I think I said to you in preparing for today that, you know, maybe if you said, Robert, what is the most important thing for growth in agriculture, then it probably is access to capital. So, you know, this just cannot be underestimated as a absolute critical feature to us achieving the growth ambitions that we have for the farm sector. So, you know, maybe the final point to say is that, you know, how does the banking sector prepare for this? How do they make sure that all those key moments that farmers have when they're dealing with them are as efficient as possible? How can they grasp the power of the data that they're going to have for the benefit of their customer and for their own management as well? I think they're really big issues for the banking sector to deal with over the next sort of few years.
And Robert, I think, you know, when we were chatting previously, what really stood out to me is, I guess, your background of actually being from a family and running a farm. You know, what's your personal experience been when it comes to actually trying to access loans or apply for facilities? You know, like, what does it feel like to be the person on the ground looking for that support?
Yeah, and as you know, I was also a rural banker myself for a while, so I've sat on both sides. I've sat on both sides of the fence as a lender and as a customer. Yeah, you know, I describe the moments of truth. Everyday banking is the most, you know, is the thing you feel most with your bank. And, you know, I talk about the example of internet banking. I think it's one of the most perfect examples of productivity savings. As you know, I used to lick the stamps and write the checks every month for our family farm businesses, which took me several hours, probably took me three hours, something like that, on a monthly basis to pay the bills. I think internet banking took that down to maybe 30, 40 minutes of effort. So, you know, internet banking, just as a simple digital example, gave me back two and a half hours a month. So what's that? You know, that's 30 hours a year that I got back of my life to do something else with. So, you know, I think it's been an amazing tool, and just a very simple example of where we took physical processes and digitized them, and that flows into then your monthly accounts and your tax management of your tax position, etc. Yeah. The other major points of touch points is when you want to do something like purchase the farm next door, you know, transition from you know, generation to generation, or when you're under pressure, and we've had some severe shocks in Australia with drought. But I think as a farmer, you just want those moments to be as simple as possible. You don't want to just keep reinventing data that you'd expect that the bank should already have. You know, you don't want to get frustrated at that process. I think they're all things that if for farmers being so busy, that if that frustration exists, that could cause a fracture between the bank and the customer. So that, you know, there's no doubt that, you know, DocuSign, you know, digital forms, moving into the cloud, all those things that I know you talk about, they are coming slowly into the banking sector now, and they need to keep going with that kind of thing, because otherwise they will risk a frustration with a client at one of those, with a customer at one of those moments of truth, as I call them, where they just need to be there for their customer.
And before I switch to Judy, there's one other topic I wanted to get your thoughts on, because you know, having listened to you and looked at some of the success stories you've also had with Judo Bank in the SME sector, and I see lots of similarities between small businesses and the needs they have and farmers operating in the agricultural sector, is a sense of having bankers as part of the community, right? Like it's that sort of empowered relationship banker that actually is there to be engaged with and accessible. Is that something that resonates in that sector?
I believe so. I mean, I think there's a, you know, as we move into more and more digital systems, there's a bit of a catch-22 there, I think, because, you know, we still want that person who understands our business, but we also want the super efficiencies that digitization brings. So I think that's something that all the banks grapple with, is how to keep connection to the community, but, you know, but still provide that super efficiency. I think my impression, you know, speaking, I'm not a typical farmer, so I need to be careful, but I think every farmer I know, and I know thousands of them, they've really changed, I think, in the last 5 years too, and including COVID. You know, the capacity to work using the mobile phone, to using the internet, the capacity to do things online has just dramatically improved. And I know there's some people in Australia and New Zealand who don't have great connectivity, for example, but you know, the huge majority of farm business owners now are ready, willing, and able, I think, to work, you know, very much online compared to 10 years ago. And remember, the iPhone, which we all have within reach, of course, Mark, where is only what now 13 years old. Yeah. So, you know, what this has done to our lives is both incredibly scary but incredibly exciting. And yeah, you know, the capacity to collect data and provide data into your lender, there's no doubt we can do that now. It's just a matter of how you want to design the system to do it, what data you want to collect, and what you're going to do with it. So, you know, making sure that that's trusted and it's there for the right reasons. Yeah. But certainly every human being on the planet now is ready to participate in their lives and businesses through something like a mobile phone.
100% agree. And look, I definitely think that, you know, bankers still have a role to play. They just need to change the nature of that relationship, right? From much like you shared the story about, rather than becoming data manufacturers or rekeyers, to actually spending more time having relationship-based discussions. So that's a great segue, I think, to Judy. So I've certainly heard about the US Farm Credit System, but really as only a result of being at nCino. For our audience in New Zealand and Australia, it'd be great to just learn a little bit more about what is the US Farm Credit System, and maybe also a little bit about what nCino has been doing in this system.
Certainly. Thank you, Mark. Happy to share. As you can see from the statistics, the US Farm Credit System is kind of this hidden banking system within the United States that has a tremendous number of assets and employees. As you can see from the org structure, there are 4 farm credit banks, and they do the funding for what they call their associations. You could think of them as kind of subsidiaries, if you will, or bank holding companies. And those associations, there's 68 of them across all 50 states, Washington, D.C., and Puerto Rico. And they are the ones that have the direct relationship with the farmers. However, the banks, in addition to being the funding mechanism for the associations, also participate in a lot of capital market type activities, where for those larger loans, they're either the lead underwriter or they participate in these very large syndications. So nCino has been very fortunate over the past few years to break into this system. And another wonderful thing about the U.S. Farm Credit System is they view themselves as sister organizations. So they speak to each other. They will share successes, they'll share failures. And when they find a vendor where they're having a lot of success, they like to share those secrets. And so at this point, nCino is fortunate enough to have the majority of the farm credit system as our customers. And we have about 13 right now live on nCino, and then the vast majority are still in project. But even though they're still in project, with the world changing so rapidly in the last few years, even those that are in project found ways to really maximize their investments in nCino. And one great success we had is in the United States. I'm sure you heard about our PPP government funding program to try to stimulate the economy. And so all of a sudden there's this massive rush on traditional banks as well as farm credit banks to take this money available by the government and to put it in the hands of their customers. It was specific to small business. And nCino was able to what we call spin up a solution in a matter of a week and bring that to our banking customers. 5 of our farm credit customers utilized that and were able to rapidly put through these loans. And in the United States, that was super important because it was just a finite amount of money. So it was first come, first serve. And so obviously to all these businesses and farmers, it was super important. The other thing that we saw with COVID in the United States is, as Robert was alluding to earlier, this massive push to digitally communicate with your customers. And so another success we had this past year is one of our farm credit associations or banks, as you might think of them, was able in 15 weeks from start to finish. Excuse me, though, that was 17 weeks, not 15. I wrote it down and I misspoke. 17 weeks, start to finish, was able to utilize our online application process to allow their customers to apply for loans, to exchange documents with the customers, whether it be tax forms, as Robert was saying, that's often important when looking at loans and structures. So they were able to start to finish, spin that up, and then they had 540 employees within the bank using that so that they can analyze and communicate back and forth with their customers. And now they're moving forward with the rest of the whole loan origination rollout journey of nCino.
So it's a classic case of the crisis driving the necessary change of card adoption, and hopefully that's going to continue to deliver benefits for the lenders in that system.
Yeah, absolutely. You know, digital is here to stay. A couple other successes as we were talking and preparing for today is just speed of getting innovation. So I know in the New Zealand banking market, unlike the United States, we have, you know, thousands of banks, and in your marketplace, it's just several very, very large institutions. So there's a finite number of customers. So it's how do you get to that customer and gain their wallet share? That's the same dilemma that the farm credit system has. And so that's another area where just speed of being able to implement. One of our customers was able to improve their speed of innovation by 87% from idea to implementation. It went from 1 year down to sometimes several weeks, again, through the use of automation and nCino. And I think the next slide has a really good quote from one of our customers, Texas Farm Credit. As you know, Texas is a very large state in the United States. This is another awesome success story. They just have been juicy with stats. And one of them was they had 97% user adoption 90 days after go live. And they were able to do that not just because of the ease of use of nCino, but also because senior management at this bank really embraced this thought, a notion of change, and they pushed through all kinds of great programs to get their customers and their employees excited about what was coming. Because as you know, sometimes when you go through a massive change, it takes some time before people actually see the results. And so by getting everyone super excited about this new technology, they were able to get tremendous user adoption. They also saw 94% reduction in administrative training. So just to get their employees up to speed on a new system or their processes at Texas Farm Credit, it went down from 12 months to 3 weeks. And if you notice, everyone, I'm actually looking at a sheet of paper because I want to make sure that I'm stating these facts correct, because these numbers are just tremendous. And of course, with stories and success like that, that's really helped us through the farm credit system.
Yeah, and I think, I mean, look, you know, often we think about the customer experience, and it's important for us to think about the customer experience, because I think, as we were discussing with Robert, the farmers are looking for ways in which they can save time, submit documents digitally, but we often forget about the banker experience, right? Because there's always two sides to that relationship. And I know as a banker, you know, when you come in there those first days, you're just trying to work out the 15 systems you have to interact with to pull this information together. And I do see a lot of value in the discussions I've had of what we call this time to competency. Like, how quickly can I bring in someone new into my organization and start to be efficient at delivering a service? And that's where I think you can't overstate the value of providing tools that are intuitive, right, to your bankers, so that they can learn quickly. Because we don't want to go and see someone and then go, you know, give me a couple of weeks to work out what exactly I need to ask from you, whether I've got the right stuff, and then come back 2 weeks later and say, by the way, we need to actually get that additional document I didn't realize. So I do agree. I've looked at the video on Texas Farm Credit, and I think their compelling story about really enabling their team is pretty powerful. That's exciting.
And I think the last thing people want when they're working in the banking sector, like I used to do as a farm lender, is to have, you know, cranky customers. You know, if you've got someone who's having a seamless experience and you're making it as easy as possible, then your point's 100% right, Mark. That's a much more you don't mind going to work every day, and that if that's the experience. But you know, I think through COVID in particular, we've all felt sorry for some of the staff that have had to do work in really difficult circumstances, and you know, the public potentially getting upset about delays and stuff like that. So you know, I think your point's well made, and indeed, when we design things like digital transformation sort of systems and tools, not just in banking but in any sector, looking after the staff and their well-being and their experience is actually a big part of what we try and think about.
100%.
Mm.
So I forgot about this other stat. I don't know if this is one that you shared already.
Well, and you know, actually that feeds in so nicely to what you were saying, because now we're talking specifically about the customer's experience. So there's nothing more frustrating than going online and applying for a loan and wondering, A, did the bank get my documents? B, am I going to get the loan? How much am I going to get? And how long will it take to fund? And so this is, again, a real live stat from auto decisioning. They went from 1.5 days to get to yes down to less than 7 minutes. And, you know, Robert stated earlier about integrations and how important that is with DocuSign. And certainly that is one of the key vendors that we work with at nCino, so that when we do get to yes, we can also present, and this bank can present to their customers the loan documents, and then they can enable the digital signature as well.
And I think DocuSign's a good example of, I think, a broader kind of drive of ag tech and fintech and reg tech. One of the things, the value we bring in terms of bringing in nCino and localizing it in our market, we've got a team of 45 now here in Australia, is actually working with all of these innovative firms and working out how we can integrate that service to bring even more kind of frictionless, faster decision times. It's pretty impressive, kind of the innovation that's taking place in New Zealand and Australia around this space. And I think there's a lot of exciting things still to come. I don't know if, Robert, you've seen some of that happening in the market?
In terms of ag tech and fintech?
Yeah.
I think the great thing about that is that a lot of those developments occur overseas, including in the Bay Area, Judy, where you're sitting in San Francisco. But our job is to try and then rapidly adopt them into Australian and New Zealand conditions. I don't think we're going to originate a lot of that, but there's so much exciting stuff coming out of those sectors that that's what's going to hit our marketplace. And as I said, I think the farm sector's now ready, willing, and able to start to use that, because we've got the tools in our hand every day, and we're starting to improve connectivity. And the generation of farmers coming through are no different to anyone else in the community. They're ready to adopt tech.
I think that's a good segue into kind of the next observation, because as we think about the experience, we think about efficiency. A lot of it is unlocked with data, I think big data has been a topic that's been around for many years. But I think it would be fair to say that no one's really successfully, especially in the lending part of the business, capitalized on all of that data. And certainly one of the value propositions we offer from nCino is looking for ways to unlock that value. I know, Robert, you and I were talking, and I think kind of related to the sort of ag tech and reg tech, just in terms of the opportunity for lenders. Now, if we put ourselves in the position of lenders, understanding your portfolio, understanding your security, understanding your exposure is more important than ever before. And it's not just from a risk mitigation, but in terms of just helping better serve your customers. What are some of the observations you're making, in terms of the lending space around identifying the value attached to that?
Yeah, look, and I think my view, what I said to you in prepping for today is that, we don't want to patronize anyone here. Usually when you go into corporations like the banks, the efficiency argument is the best place to start, because everyone's under pressure and cost margin is under pressure. So, I think when we're talking digital transformation more broadly, usually efficiency and productivity is the place to start. And I think that's good about what you're presenting, is that at its heart, it's got a time-saving, efficiency, quality, service, customer service advantage. So that's good. I always like starting there. But then as I say, what's the spin-off? What's the gift with purchase of getting better data and building this massive, capacity to manage big data? And I think what I'd be saying to banks and other clients we have is start preparing those data systems, because the drive and the power that you get out of that, yes, that to some extent that's still emerging, whether that's sustainability services or, as you say, internal risk assessment, know your customer better. You start to predict and sell and service your customer, in terms of ahead of time, rather than be reactive to something that's happened to your customer. So I think all of those opportunities will come. And if you've got your data systems and your data management plan, to me, that would be it. You have a vision for where you want to go as a bank in terms of your data and what services you want to drive, and you start setting up the systems to do that. They're very rich, data-rich environments, and I think what will appear to the banks in terms of their service offerings driven by data will be quite exciting in the next few years.
And I think as an extension to that, and kind of building on what you're saying, is think if you fix the experience, you're going to fix the data, right? The data is only going to be as good as the experience that people are having using it. And we've seen so many stories where with that disaggregated data makes it difficult for bankers and lenders and even customers to be able to access and update. And often it just sits in a data warehouse and goes stale. So I think very well put in terms of identifying the efficiencies. But Judy, obviously with the penetration of nCino into the US farm credit system, I think you guys are a little bit ahead in terms of now starting to think and understand what opportunities that presents. Maybe if you could share with us, from an nCino perspective, as you've got, as Rob described, this foundation established, help us understand what are the value drivers that banks should look forward to in terms of unlocking with that foundation.
Absolutely. We call it the Intelligent Enterprise at nCino. And so here on the slide, you see one of them is being able to do pricing and profitability, RAROC pricing. That is something that nCino's product management group is working very closely with the agricultural banks in the United States to get that right. We all know the way that ag lending is different than a traditional bank. It's cash to accrual accounting, which isn't exactly the same as what you see in a traditional financial institution. So we're working really closely with our banks on that. And then the next one is just being able, you've got all this data, and so being able to have digital assistance. And that's more of, we were talking about that safe harbor coming events. That's a coming feature to nCino. But 3 and 4 are very much available today and being used by our agriculture banks in the United States. Number 3 here on cost savings is the concept of auto spreads. So this applies to both your customers within the bank or your people in the bank, as well as your customers outside the bank. So imagine, if you will, they go on, apply for a loan. Of course, you're going to ask for some financials. They upload their financials, and in the back end at the bank, those financials will automatically be pre-populated into your spreads so that you can spend your time, instead of rekeying in all these data points, actually being able to do the analysis and give some real value back to your potential customer. And then last but not least is what we call portfolio analytics. Robert was talking about how important getting the data right is. I mean, agriculture lending, I'm sure you probably heard about the frost that happened. We talked about Texas earlier today. It was an enormous, they had snow in Texas. That's unheard of in the US. And, those banks needed to know right away who are their farmers and what crops are going to be adversely affected by this snow. And of course, citrus crops were one of them. And so with these portfolio analytics, you can go in and mine your data portfolio. So those are just 2 examples that we're seeing in the United States right now of our customers using the Intelligent Enterprise to be powerful and to add value.
I think, Mark, agriculture is slightly unique in the sense that it's also got features around, the environmental footprint, the carbon footprint, for example, which are now coming into, the regulatory compliance requirements as well. So we've seen a lot of focus on regulation of the banking sector, and anything where that can be done better, faster, simpler. That's an important feature as we move into the next decade as well.
Yeah, and I think actually, I applaud New Zealand and Australia. You guys, that's an area where you're definitely ahead of the United States. That's coming in the US. We're just not quite as advanced. So that's a great point, Robert.
Good to hear. Well, we've run out of time. I want to firstly thank Rob and Judy. Really appreciate your time this morning in terms of sharing your experiences and insights. I think there are so many synergies, as we look at some of the challenges faced in the US and some of the things happening here in Australia and New Zealand, of how can we learn from those experiences and best practices. I think as a final plug, we just announced our alliance with KPMG just 2 or 3 months back, I think just looking at this conversation, it just shows the power of a partnership where we've got the deep industry expertise of KPMG in terms of advising customers on some of these industry trends and thinking about how to unlock the value combined with the technology of nCino and our experts on the product. So really looking forward to more to come. And, I think for anyone in the audience, if you want to learn more, please feel free to reach out to either nCino or KPMG, and we'd welcome the conversation.